Hello and welcome to Property, Plant, and Equipment, Part 6. My disclaimer and copyright notice: the information and opinions in this presentation are those of the author only and not the author's employers or affiliated organizations, including but not limited to Irvine Valley College and the South Orange County Community College District. The presentation is for educational purposes only and does not constitute any legal or accounting advice whatsoever. This presentation is copyright 2008 to 2020 by Bennett Tchaikovsky. All rights are reserved. Any distribution is strictly prohibited. So what we're going to be talking about today is the sale of property, plant, and equipment. So when we sell equipment, what we have to remember is that when we sell it, we need to remove the balances that are associated with that equipment. Mainly the equipment, which is really generally going to be at our acquisition cost, and then the accumulated depreciation on that equipment. Also at the same time, I'm also going to be receiving cash, and so I'm going to be debiting cash. Why do I debit accumulated depreciation on equipment? Because that is a contra asset account. It's generally going to have a credit balance. To get rid of it, I need to do this as a debit. Why am I crediting equipment? Because when I am selling equipment, equipment is an asset and therefore will generally have a debit balance. I will therefore need to credit equipment. However, that journal entry is not really going to be realistic because generally the cash is not going to be the same thing as what I'm receiving in terms of my net book value. Therefore, when I'm going to add to this equation, or what I'm going to add to this journal entry, is I'm going to be debiting a loss or I'm going to be crediting a gain. These are what I call my balancing entries. I can't have a loss or a gain. I can't have both. It's going to be either one or another or none. But generally it's going to be one or the other. The way I want you to approach these questions is I want you to memorize this journal entry. Trust me that this is a journal entry that you want to memorize. If you can memorize this journal entry, you're going to get through these problems without a problem. Because if you don't do it this way, it's going to be a nightmare. I can share with you that a lot of accounting texts that I have seen over the period of time, they say, oh, well, if the net book value is less than the cash proceeds, you got, no, don't worry about that part. What I want you to do is I want you to memorize this journal entry. And then what I want you to do is put in the values that you know, right? To the equipment, the cash, and the accumulated depreciation. We'll figure out the loss or the gain based on those three values. It's then again, whatever I need to balance. Whenever I do a journal entry, my total debits have to equal my total credits. So let's go back over here to Sahar's mom's class call. Purchased equipment on April 1st for $400,000, cost $80,000 to install, and the shipment to the facility was $20,000. Equipment is expected to last for 5 years and has a salvage value of $200,000. So here's our first situation where we're going to have a loss. Assume that Sahar's mom's class call used straight line depreciation and sold the equipment for $180,000 on August 31st, 2020. Prepare the journal entry to record the sale of the equipment. So let's go ahead and take a look at this right now. Okay, so we're going over here to our very first scenario, which is assume that they use straight line and they sold the equipment for $180,000 on August 31st. Prepare the journal entry to record the sale of the equipment. So here, my date of sale is going to be 8/31/20. Now, what I want to do here is I want to write out the journal entry that I asked you to go through and to memorize, which is this one right here: loss balancing, accumulated depreciation, cash, equipment, and then a gain balancing. And this is going to be to record the sale of equipment. Okay. So when I'm looking at this here, is that my equipment essentially cost me $500,000, right? It's the acquisition cost. So I'm going to be crediting my equipment for $500,000. The other thing that I know is that my cash received was $180,000, because it tells me right over here that I sold it for $180,000. What I now need to try to figure out, though, is what is my amount of accumulated depreciation? So the question is not telling us that information, so we need to go through and figure it out. So how do I figure out the amount of the accumulated depreciation? Well, what I'm going to need to do is to figure out how much depreciation did I take during each one of these years. So for 2018, how much should I take? Over here, when we use straight line, it's the acquisition cost minus the salvage value divided by the estimated useful life. My acquisition cost was $500,000. And if you don't know where that came from, please watch the previous videos. My salvage value is $200,000. My estimated useful life is 5 years. This is going to be giving me $300,000 divided by 5, or $60,000 per year. Year of annual depreciation expense. Okay, so for 2018, the amount of accumulation that I recorded in 2018 was going to be 60,000 times 9/12. Why is it 9/12? Well, over here, I used the equipment from April 1st through December 31st, or for 9 months. Okay. For 2019, I increased my accumulated depreciation balance by the amount of depreciation that I took, which was going to be over here for $60,000 for the full year. For 2020, it's a little bit different. In 2020, how many months did I use the equipment for? Well, instead of going from the beginning till the end of the year, I need to go from the beginning of the year, or January 1st, 2020, through August 31st. So how many months did I use the equipment for in 2020? It's going to be January, February, March, April, May, June, July, August, or 8 months. So what I'm going to be doing here is I'm going to multiply 60,000 times 8/12 for a total of $40,000. So it's going to be 60,000 times 8/12 for January 1st through August 31st. That's going to give me a total of $40,000. So the total amount of accumulated depreciation that I've taken on this asset is going to be right over here at $145,000. Okay, so if you don't understand the way that I'm going through and writing this up, if I were to actually look at the journal entries that I would be doing for every single year, and I'm just going to do this today because I had a student who really didn't understand how I was going through and doing this with the T accounts. So in 2018, on 1/1/18, my accumulated depreciation for this asset is going to be 0, right? Because I never bought it, right? Basically, I bought it this year. So the amount of the depreciation expense that I took in 2018 was $45,000. So over here, whenever I do a journal entry to record depreciation expense, I debit the depreciation expense and I credit the accumulated depreciation. So over here, my ending balance on December 31st, 2018 is going to be $45,000. I never close out accumulated depreciation because it is a contra asset account. My expenses and revenues get closed out to retained earnings. So this balance would go to 0. For 2019, the amount of depreciation expense I recorded was $60,000. So here, my ending balance of 12/31/18 becomes my beginning balance as of January 1st, 2019. So in 2019, I took $60,000. So my ending balance and accumulated depreciation would be $105,000. taking this one more year to 2020, the amount I recorded this year was 40,000. And so over here, my ending balance for December 31st, 2019 becomes my beginning for the following year. So my ending balance here is 145,000. This here abbreviates all of this. I just need to figure this out because when I am going through, I need to eliminate this. This is what is sitting on my books. So I need to make this go to 0. So I'm going to be doing that over here with a debit. Okay. So now I've done this over here and I say to myself, what do I need to do to balance? I have 325,000 of debits, 500,000 of credits. So to balance, I need a debit for 175,000. So I get a total over here. Now, does this make sense? Well, if I look at my net book value for this asset, right over here, I had property, plant, and equipment. I paid 500,000 for it, less my accumulated depreciation over here of 145,000. So my net book value for this equipment is a total here of 355,000. Okay. Its net book value is my property, plant, and equipment minus accumulated depreciation, or PP&E net. I compare this 355,000 to what I sold it for. Okay, right over here, sold for 180. So if it was worth 355 to me, but I sold it here for 180, my loss is going to be 175,000. It was on my books for 355. I'm only getting 180. I have a loss. You do not need to do this part of the equation. If you do the journal entry like I've shown you, you're going to be in amazing shape. Okay. Let's now take a look at this question from a loss perspective, or excuse me, from a gain perspective. So I got right over here. And we'll go down one more for the gain. Same situation, but now I'm going through and selling it for 420,000. So when I come over here to this part here, so instead of selling it for 180,000, what I am now going through and doing is I am selling this for 420,000. Okay, so what's exactly changing? Okay, well, the gain or loss are balancing. And so my cash that I'm receiving is 420,000. Again, accumulated depreciation is not changing. We're just changing the amount that we're selling the asset for. So here, my total debits are 565. My total credits are 500. To balance this journal entry, I need a credit for 65,000. So that gives me my total debits are equal to my total credits. When it comes down here, does the gain make sense? Well, now that I'm going through and doing this, right, my property, plant, and equipment is still 500,000. My accumulated depreciation is still 145, but now I'm selling it for 420,000. So I'm selling this for more than it's actually was on my books for. So I'm going to have a gain here of 420 minus 355 or 65,000. So again, you don't need to do this part of it if you memorize the journal entry. So the key to dealing with sales transactions is the first step that you want to go through and do is you want to figure out, you want to write down this journal entry. That's the very, very first thing that I would do. Okay. The next thing I would go through and do would be you write out the journal entry, write in the amount of cash that you're receiving, write in the acquisition cost of your equipment as a credit because we have to get that off our books. The cash we receive is going to be a debit. So what do I need to do? I'm going to need to figure out accumulated depreciation or how much depreciation did I take every year. The best way to do this is to go through each year and figure out how much you did. Just remember though, remember the period of use. For 2018, because I bought it on April 1st, I used it from April 1st through December 31st. Used it for the full year in 2019. For 2020, I didn't use it for the full year. I used it from January 1st through August 31st, or for 8 months. So that is how you go about in solving questions relating to the sale of assets. So I want to thank you today for watching. Please do not forget to like and subscribe. If you have any questions, please feel free to email me at 1812cpa@gmail.com. Have a great one.